In today's video, I'm going to do a review of the property market for 2020. I'm going to go from commercial to residential. Are property prices going up? Are we in a bubble? But before you forget, make sure you give this video a thumbs up. For those of you who are new to the channel, my name is Shane Fleming. I'm a chartered property consultant. I have over 17 years experience and I use this channel to discuss property related topics and sometimes what it's like to work in real estate. 2020 has been a very strange year. It started off with bushfires in Oz. We had the Trump impeachment. Then we had this coronavirus leading to lockdowns. We had the US elections leading to Trump losing the plot. We had Black Lives Matters. And now we have a vaccine and we also have a Brexit deal. Given all of that, there is going to be some winners and losers within the property market. Let's get commercial out of the way first. Even though we lost a quarter and there was a number of lockdowns, the commercial market in Ireland performed reasonably well given all things considered. In terms of volumes of transactions, we are approaching probably 2.7 billion or maybe 3 billion in terms of total transactions on the commercial market. That is a reasonably good year. It's nowhere near the heights of 2019 where the volumes of transactions were up at 7.1 billion, but that did include the sale of a REIT for 1.3 billion. So in overall average terms, 2020 in terms of volumes of investment sales has not been too far off the 10-year average. The big difference though with 2020 is what was the best performing sector in terms of total volume. This year in 2020, actual build-to-let residential blocks actually were the top performer. The norm is that the office is the top performer. So what were the top 5 investment deals of 2020? So at number 5, we have Baggot Street Plaza, an office scheme that was sold for 141 million. At number 4, we have a portfolio of 317 residential apartments, which were sold for 145 million. That was in Dublin. Number 3, we have 28 Fitzwilliam office development, which is the ESB building, which sold for 170 million or thereabouts. Coming in at number 2, we have Bishop Square, an office development again, which sold for 182 million. And a top spot in Ireland for 2020 was the sale of an apartment development scheme out in Dunleary of 368 apartments, which sold for just 200 million. So that is the top 5 deals. But looking at those actually top 5 deals, most of them were agreed kind of earlier in the year, but also when you look at the deals, even the top 5 deals, or even when you extend it out to the top 10 deals, all of them were in Dublin. 4 of the top 10 deals were residential build-to-rent schemes. Residential build-to-rent schemes and prime office developments weren't the only standout performer in Ireland in 2020. Industrial actually performed incredibly well. I said at the start of the year that industrial would probably be the standout performer for 2020 in light of the fact that there is a move towards online retail. That has been proven. Industrial has been the standout performer, but what it has compounded that is that there's been an increase in occupier demand, and also there's been more investors who are trying to get into this space. This has led to actual investment yields on industrial space competing with office yields, and they're coming down to 4 and 5%. It hasn't all been rosy in the commercial market. It's been a hard year all round, generally speaking. Retail has suffered badly with all the lockdowns, and institutional investors have devalued their retail portfolio by as much as 26%. The lockdowns haven't been easy for the hotel market either. Many hotel development schemes have not progressed too far since the first lockdown. And this is not unexpected, but interest is still there. However, there definitely is a sense that hotels have been devalued, and that is particularly so when you consider that occupancy rates are down by nearly 60% in 2020. Secondary office market has suffered considerably also. While supply levels are reasonably low or considerably low, both on the leasing side and the investment side, tenant inducement are up, and also asking prices for investment properties are down. I've seen asking prices drop as much as 10% or more. So questions to ask when considering the commercial market. Number 1, is office dead? Number 2, is work from home the new future? 3, when will tourists return? And 4, is online sales the future for retail? I strongly believe the office market is not dead. I believe people will return to their offices. Work from home will benefit some sectors, but work from the office is the future. Work from home was a stopgap to help the status quo or help companies maintain their current status quo. But work from the office will be the future, and work from the office will drive businesses forward. I've discussed it before. Cities are our future. In history, pandemics have shown that if they're dealt with within kind of a short time frame in terms of 1 to 3 years, generally what is followed is a strong economic development within urban areas and lots of innovation. I don't see why that won't happen this time around. I'm a strong believer that there will be more development in urban areas than there will be in rural areas, and I think the cities are the way of the future. I do not think work from home will be the downfall of cities or of offices. Tourists will return. There's people all over the world that want to travel and have an itch to travel right now. I think the lockdowns have shown the benefits of actually traveling, and people want to get out and want to travel. I think in the next year or so, it may take a year or so, but I think tourists will definitely return. With all of this in mind, I think investors will bear that in mind for long-term investment. So they will look at prime offices and prime hotels as good long-term investments. However, on the other hand, the trend for online retail is growing. Ireland was actually way behind the curve, but the lockdowns have definitely helped Ireland catch up, and I think it's here to stay. With this in mind, investors will be worried about retail investments, and particularly retail brick and mortar investments. So therefore, there's a likelihood that a lot of retail stock will be continued to be devalued. Okay, so enough on the commercial market. I'll move on to the residential market. I will cover off commercial future trends in more detail in regards to, I will cover it off in a prediction video, which I will upload on the 1st of January. But if you've liked this video so far, make sure you give it a thumbs up. So where do I start with the residential market? It's hard to even describe what's actually going on. And I have been thinking about it for a few weeks now, and I came up with this analogy, right? So remember at the very start of lockdown, and people went crazy and panicked by a huge amount of toilet paper, thinking that it was going to run out and supply wouldn't return. Well, I kind of feel that that's what's going on in the property market right now. Granted, that metaphor has a lot of holes in it, but you get what I mean. Some home buyers are panicking and overpaying for property. At the first lockdown, I created a video and I predicted that some house prices could fall by 5% in some areas, and other house prices could fall by 10% within a year. That video, or that prediction, was just about 9 months ago, so another 3 months away from when I kind of felt that would come true. I also predicted that some houses could fall as much as 20%. Mainly kind of what I was suggesting at that point was pre-63 houses, because some of the values are underpinned by the rents, could fall as much as 20%. I was wrong. I was not totally wrong. Dublin City house prices have fallen by 4.4% in the last year. I've been able to negotiate 10% discounts on some properties. And in terms of pre-63 houses, there definitely is still a demand out there for them. But in terms of the levels of bids that are coming in, they definitely are considerably lower than they would have been this time last year. But as a whole, I was wrong. I misjudged a number of factors and a number of changes that actually happened. The government injected 30 million plus into the economy. They extended the first-time buyers grant and added another 10,000 to it in terms of that scheme. The vaccine was developed far quicker than anyone predicted, which has given the global economy a little bit of a boost. I misjudged the growth of pharma exports and their impact on Irish GDP. I thought the property lag effect would actually kick in quicker than it normally does, as lockdown would make people realise that a recession was on its way quicker than normal. And I wasn't expecting the wage subsidies to be extended beyond July as originally planned. And I think one of the major factors that I didn't consider at the start of lockdown or the first lockdown was the fear factor and how that would impact supply. And what I mean by fear factor, I'm not talking about the fear factor of people who may have been considering selling and were fearful that their property price may drop or their price of their home might drop. I'm talking about the fear factor of allowing people into their house and infecting their families. Homeowners didn't want people in their house. They didn't want agents in their house, and they certainly didn't want the public viewing their house. Therefore, they held off putting their house on the market due to this fear factor. This greatly impacted supply in Q2 and Q3 of 2020, and it is still impacting supply. And I don't think that that fear factor will disappear until the vaccine is rolled out nationwide. Supply levels are starting to come back to normal over the last 2 months, but as a whole, in terms of 2020, supply levels are down by 25% to maybe 30%. I have commented on headlines during the year, criticising headlines that suggest prices have increased by 7.4% in 2020. These figures came from a DAF report which were focused on asking prices, and these asking prices I'm not a fan of. I'm not a fan of using asking prices for averages of anything, particularly when you're doing a valuation of an individual property. As I've said before, asking prices or average asking prices can be very misleading. I had a quick look at the IPI valuation tool that we use, and looked at Dublin, and it stated that average asking prices were down by 6.7% in the last 6 months, or 8.5% in the last month. Again, I'm just not a fan of using asking prices to value an overall market or to value any type of property either. Slightly better use of averages, but again, they're not great. But at the same time, it is slightly better or more accurate data because it's based on sales prices that actually have sold properties. Is the CRO figures that came out in October, which are based on sold prices. These figures suggest that the average sold price for Dublin City has dropped by 4.4%, and Dublin as a whole has dropped by 1.2%, and national prices have dropped by 0.4%. But some areas outside of Dublin, particularly commuter towns of Dublin City, commuter towns of other large cities around Ireland, have actually increased in price, some as much as 3.3% over last year. A lot of this is being led by work from home, and there definitely is a demand out there for family homes, 3 and 4 beds with gardens. However, if you were to look at the average sale prices or sold prices on the CRO from the start of lockdown to October, the national average has actually dropped by 1.4%. And even if you look at figures even further back, if you were to look at the national average price has actually dropped by 5.6% since January of 2019. I could read the CRO figures slightly differently and say something else and say that prices nationally have increased by 0.4% from September to October of this year. But again, I can manipulate these figures, or the press or whoever wants to can manipulate these figures as much as they want. They're not the best way to value an individual property, but they do give some sort of indication of where the market is going over the last year. And definitely on a whole, the average is going down. I get a lot of comments on social media in regards to, because supply is low, prices are going to get up. I even get comments as well on social media saying property prices never fall. I don't know where they get this belief. Low supply is not a determining factor for price. Demand and economic factors that actually drive demand are a far better indicator on what actually the property price will be. Economic factors indicate that we are in a recession, so why aren't house prices falling even further? So are we in a bubble? What is a bubble? What's an economic or an asset bubble? Well, most kind of basic thing it boils down to is if an asset price appears to be based on an impulse or an inconsistent view of the future. So what's going on here? Are people acting out of impulse or fear? I'll let you decide if that's what's happening at the moment. In looking at this overall, in terms of supply and demand, I wanted to determine, is supply really that low and is demand that high? Demand for property in some areas in Dublin, suburbs and commuter towns and villages definitely are high. There is definitely a demand out there for 3 and 4 bed homes. I'm not denying that, and those house prices are definitely going up. But from an overall point of view, where is demand? Where is demand going up? Granted, personal savings are up, and there's a lot of people looking to change their situation this year. There is a lot of reports out there that in October mortgage approvals were at record high. That's not that hard to believe, considering that the months of lockdown, etc., that mortgage approvals would be up from one particular month to last year, because there's not a lot has happened this year. But total mortgage approvals are down this year. They're down by 19% in terms of total numbers, and they're down by 14% in terms of total value. And that total value equates to 444 million less lent this year, or less approved this year than there was last year. But 19% less mortgages granted this year should mean that there's less demand. I'm not saying there's less people want to actually buy a house, but I'm just saying there's less people in a position to buy a house. Therefore, demand should be dropping. Granted, there has been a 20-fold increase in savings, and there's a huge amount of savings out there, but how much of that will actually go into buying a house is unclear at the moment. Other economic factors are at play here as well. We have growing unemployment. We probably, consumer confidence is going to be dipping, and all of that should lead to less demand. However, the desire to move and increase savings are helping to keep demand high. I would suggest that people are acting out of impulse and fear, that they're actually having a bigger impact on prices than the supply side right now in some sectors. So on the supply side, I had a look at IPI, the valuation tool that I've been using. I've mentioned it before. On average, there's about 55,000 homes sold in Ireland every year for the last few years. There's been just over 44,000 homes sold in Ireland in 2020. This probably will be closer to 46,000 by the end of this year, which, all things considered, is a reasonably high number given the amount of lockdowns that we've had and how difficult 2020 has been to actually get that close to the average of 55,000 over the last few years. If we completed 46,000 this year, that's not a bad year in terms of actually houses being sold in any one year, which is a considerable amount given the amount of lockdowns we have had, and it's not too far off the average. Looking at the sales volumes over the last few months, nationally there's been about 5,000 homes sold every month for the last 2 to 3 months. That's in line with the norm. That's in line where the norm would have been over previous years. And the same can be said with Dublin, where approximately 1,500 homes have been sold each month for the last 2 to 3 months. Again, that is in line with the norm that would happen in 2018 and 2019. The volume of houses sold in 2020 is not far below the norm, and the average per month that we're now running at is in line with the monthly norm. The supply might be down on the year, but the number of completed sales per month are now back to normal levels. As the market kind of levels out and the vaccine is delivered nationwide, I can see more houses coming onto the market and supply slightly increasing. I can see demand kind of leveling out and staying steady. With this in mind, I think that prices will level out and there should be a bit more of a normal market. With this in mind, I think prices will fall slightly in 2021. I will complete a full prediction video for 2021. I will upload it on the 1st of January, but if you have any predictions for the property market that you'd like to share, please put them in the comments below. I'll have a think about them. Perhaps if you get them in there, I might be able to add them into the video. Also, if you've liked this video, make sure you give it a thumbs up. And as always, thanks for watching. And I really want to thank you for your support in 2020 so far. Thanks again.